This week we've got quite a lot on the watch list. Now, for YouTube people, we do have some very specific trades that I'm not going to make too public. They will be spoken about at the end of the video. Um, so if you want to get that, you're going to have to watch till the end. If not, then goodbye. But anyway, let's get started. If you see me taking breaks or you see me pause, it's because I'm reading the charts or admitting people into this webinar. Yes, this is our weekly rundown where we'll go over the markets, we'll have a look at what's going on, and we can have some discussions. So first of all, this is the watch list. We've got dollar yen, US crude oil, we've got euro yen, the Australian dollar New Zealand, we've got the US dollar Mexican peso, US 30 or the Dow Jones, euro dollar, CAD yen, CAD Swiss, gold, and silver. So we'll just start with dollar yen because it seems to be probably the easiest one. So, dollar yen is tricky. Now, again, anyone that's been watching either my streams, these webinars, or my YouTube videos will know my stance on dollar yen. I am looking for some short-term bullishness, but the problem is that we've got is the yen is presenting relative strength at the moment. So let me show you this, which is the currency strength. So we can see over the past 5 days, the blue line here, this is the yen's performance. It's outperformed all of its peers. Friday actually was very lackluster for the yen. 7 days, very similar thing. Strong outperformance. And even on the 30 days, you can see it being relatively dominant here too. So that's a little bit of a negative factor for dollar yen. So it's not necessarily a trade I'm going to be jumping into straight away. It's something I'm going to have to sort of gauge. I'm going to have to watch how the yen moves over the next couple of days, possibly just the rest of the week. We might look to jump into dollar yen longs. Now, the thing is with dollar yen is we're facing some problems or some future potential problems, I should say. What we don't want to do is get back into the carry trade mindset. So we don't want to start looking to buy the yen or buy dollar yen all the way and just hold it and hold it and hold it because what we are facing or what we are very likely to face very soon is the intervention. So the current target for the intervention by the Bank of Japan is 160. Sorry, not by the Bank of Japan, by the Ministry of Finance. This is where the majority of institutions are talking about. So we need to be very careful, sort of 160 and upwards. So what we also need to be aware of is interventions aren't normally on the dot. We never really see, for example, 160 hit and then straight away to the pip we see an intervention coming. So from 160 up until what 165, you can see I've got each key level here drawn up. And this is essentially the danger zone where I'm going to be completely hands off dollar yen because what we could do is there's two situations where the markets start waiting for the intervention and it doesn't come, and that would just lead to chop. It's not going to be good. Or we get the other situation where it comes up to something like here and we're like, okay, maybe the intervention's not coming. Maybe it come at 170 or 175. And then it does come right at the top of 165, for example, because we can't time them. It's very difficult. So it's just not something I'm willing to put money on at the moment. But some short-term sort of day trades or intraday positions with very strict risk management and dollar yen longs might work out. But again, it's not my favorite idea right now. We do actually have the president here. This You can unmute yourself if you want to say something, but we can if you want to sit and listen, that's completely fine as well. Oil is the next one. Now, oil is, in my view, again, it's got potential, but I'm also very cautious around oil. So this is obviously the weekly research we put out every Sunday. So we do have oil reading as a bullish idea. So we've got OPEC supply cuts and geopolitical risks in the Middle East continue to support oil prices. US shale production growth is slowing, limited downside pressure. If the Fed cuts rates, oil demand could increase as economic conditions improve. Any escalation in the Red Sea shipping distributions or tensions in the Middle East could trigger price spikes. So that's very basic, but it's enough for me to start looking to potentially go long on oil. Now, if we also consult the Edge Finder, which is something I use. Oh, hold on a second. Maybe I'm a little bit outdated. Sorry, apologies, ignore that. It was reading bullish on the Edge Finder, but apparently not now. So anyway, oil doesn't seem bad. We are seeing a really strong reaction off this key level of what was previously resistance or support, depends how you look at it. But either way, it's a key level that we are seeing a very nice bullish reaction from. However, The thing that I'm a little bit concerned about with oil is what Trump is saying and what Trump is doing. So we've got the situation where Trump is obviously drill baby drill in the US. That's an increase in oil supply. He's talking about making Canada the 51st state or wanting Canada to be the 51st state. And what is Canada, what is a huge part of Canada? Well, it's oil. So if Trump gets oil, then again, that drill baby drill narrative just increases. We've also got the potential, the Greenland talks as well. I don't know how realistic that is, but Greenland as well is quite big on oil. We've also got Trump wanting OPEC to, lower their prices. So actually, his arrow is the wrong way around, but that's pretty negative in my opinion for oil. So it's all talk at the moment. There's no action on oil prices actually going down, which is why I'm a little bit wanting to go in for buys, but also erring on the side of caution. So if I do go in for an oil long position, it would be very, very small. So for example, again, this isn't a signal. I'm not taking this position at this price. It's just for example purposes. If I did take this position, it would be very likely 0.5% risk, very low risk for me. And I will be trailing stops aggressively because we don't know what Trump's going to do. He's essentially a a bar of TNT, and we don't know how long the fuse is. So, he could say something tomorrow, or he could say something in a month's time, or it could be 6 months' time. Really don't know. You're kind of playing with fire. So oil, again, it's got potential, but it's definitely not my A star thing at the moment. Euro yen. Actually, you know what? I'm not going to include euro yen because I'm not a huge fan of this one right now. Now, the Australian dollar New Zealand typically isn't something that I pay attention to or even watch because obviously the Australian dollar, the New Zealand dollar, very highly correlated. The market generally is just very sideways moving. As you can see here, this is the H4 time frame. We've had one sort of significant spike. Unless you're a range trader, there is absolutely nothing to do here, really. But what's piquing my interest is if we go over here and we have a look what the position, oh sorry, what banks are in what positions or what institutions, we do see that Danske Research is currently in a short position. We've got the Edge Finder over here that is reading bearish on the Australian dollar New Zealand. And we have, of course, we've got the Elite Traders Research that is also suggesting a short on Australian dollar New Zealand. So the reason is we've got the Reserve Bank of New Zealand, so the RBNZ, is likely to keep rates higher for longer, while the RBA, so the Reserve Bank of Australia, is facing pressure to cut rates due to weaker domestic demand. China's economic slowdown disproportionately affects AUD as Australia is heavily dependent on Chinese commodity demand. New Zealand dollar has strong domestic demand, higher inflation, reducing likelihood of near-term rate cuts. So we're looking really at a central bank divergence slightly there. So there is potential. It's something I'm watching in terms of technicals again, because it's such a range-bound market. Typically, it's very difficult for me to start looking to really get any sort of pinpoint entries. So I'm going to have to really sort of dissect this market in terms of technicals just to give me some sort of idea in terms of where could we possibly look to enter. And very quickly here, what I ideally would be looking for is some sort of break of this level of support that we've got here. So some sort of clear move to the downside. I can enter just following the momentum and possibly just take it down to the next support or even just trail stops and let this trade just run. But again, it's a very difficult market for me to trade with the way that I approach the technicals. It's not the easiest way to, not the easiest market to really go about, but the idea is there. So we'll keep paying attention. Next one is the dollar Mexican peso. This isn't my bag of trade. I actually don't ever trade the dollar Mexican peso, but it was something that piqued my interest because we've just had Trump apply tariffs on Mexico, and again we do have the US dollar Mexican peso right here, suggesting a long position. I'm just going to take a drink. Give me a second. So the Mexican peso has been one of the strongest emerging market currencies, but Blanco is expected to start cutting rates in 2025, which could weaken the Mexican peso. The Fed's higher for longer stance will likely remain, or sorry, likely maintain US dollar strength, making US dollar Mexican peso attractive. US dollar Mexican trade relationships but could become volatile if a new administration introduces tariffs, which they have done. Obviously, I wrote this yesterday, so this was couple of hours behind the real-time news, but this has already happened. If global risk appetite weakens, emerging currencies tend to underperform, benefiting the US dollar. So there you go. Again, a very straightforward, a very simple potential trade. At the moment, again, price action is very choppy. So I would really be looking for a very simple move to the upside, break past all of these previous highs, some sort of retest, and then a continuation. Nothing complex, very easy. Just wait for the break, the retest, and then look for an entry. So yeah, we'll see how this one develops. US 30, this one, to be honest, isn't really much of a fundamental trade. In my opinion, the way I view this market is it's more a case of just buying into the trend, just buying momentum and following the market. So I'd be looking for some sort of correction of the bullish, impulsive, or aggressive moves we had back on the 27th, buying off the previous low. So just forming some sort of double bottom and letting, again, this trade run possibly just back into the previous all-time highs here on the Dow. Um, so yeah, we'll see how this one goes. We'll see if we can get the relevant pullback. At the moment, it's likely, but again, we'll have to just see because this current run on the Dow is strong. It's got a lot of strength to the upside. So pullbacks have been very few and far between. We've got euro dollar. This is obviously it's been my favorite for a very long time, and I'm quite happy to keep shorting. So if any of you guys saw what I put in the Discord, I think it was roughly an hour ago. It was a video of Trump. And I'm not. I think it was from today, but I could be slightly wrong. It is a very recent clip though. It was a video of Trump basically being asked by a reporter what if he's going to put tariffs on Europe. And long story short, he said yes. The Europe has treated the US very unfairly, and he's not happy. So he's going to apply strong tariffs. I think he said again. Go and watch the video. Don't quote me on that one. I can't remember the word for word. But essentially, we're looking at tariffs on Europe by the US. Now, again, given the tariffs that Trump's already done on Canada, Mexico, and China, it's likely we are going to see the US dollar continue its strength as we get rid of some of the uncertainties that have been surrounding tariffs and putting some pressure on the dollar recently. So I'm quite happy to hold a potential euro dollar short if we can get in. My target remains towards parity. Now, again, if we get parity, perfect. If we don't, we need to be very careful because Europe could do anything. If you guys were watching the ECB press conference, it didn't sound good in terms of holding rates anytime soon. It was a unanimous decision this month, and it sounded like they're on track to cut again in the next meeting. So again, we've got that sort of rate divergence there. So, President, before I move on to my slightly bigger trade ideas, do you want to talk about anything, or should I carry on with where I am?
So basically, can you guys hear me?
I'm not sure if you're there.
Yes. Can you hear me,
Oh wait,
guys?
hold on. Uh,
Yes.
can't hear you. Oh, I can't. Oh, it must be a me issue then.
Yes, someone else. Yes,
It's
people can
okay.
hear
Carry
me
on.
right now.
I'll sort myself out. Yeah.
Okay. Basically, so I don't have any charts at the time because I didn't start yet my weekly checkup. But basically, I'm do focus on the yen and the Swiss franc because with the tariff situation, I do expect that some investors might want to take a step slowly than usual. That means they might looking to have some things to put on the side. So that's mainly the for the next 2 weeks. These two currencies I'm gonna look for. So the Swiss franc and the yen Japanese, and against potentially the Aussie and the New Zealand dollar. That's the main two currency. If I have to take a trade, I'm likely to looking to short the AUD and the New Zealand dollar against those specific currencies. Now moving ahead with what happened a couple hours ago regarding the tariff, it's something that was mainly hyped on the market. So people say at the first place it was a false information, but it comes out actually is a real information right now. It's confirmed. Regarding the Europe situation, what's going to happen is he's going to wait before applying the tariffs to Europe for one main reason. Last week, we had a couple transfer from the French military to the US. So not too many people heard about it. So people who live in the specific city in France have saw it. So I do think they have something ongoing with the US right now. That's why it do not speak too much about how much it's gonna put on France and Europe specifically. Uh, uh, that's are the main things I'm reading about it. Right now, me, I do have we have the US dollar and the Swiss franc. Can you just pull up the charts for me, please? Okay, so basically this position, I wanted to close that position last week, but based on what's going on with the USD, I still see the potential to keep that trade running. The current situation right now is market participants do not really understand what the word tariff means. Okay. When people heard about the tariff, they associated tariff with USD going bullish, which is have nothing to do with the market. But when Trump will finally apply the tariff to every country, we might see the US dollar moving without pressure. Now, what's going to happen? It's going to become from potentially the Fed next move. That's the main thing I'm worried about it right now. Last week, we have a bunch of hedge fund and systematic orders came from the market. I specifically saw many sell on the Swiss franc, which I wasn't that happy with it because they keep on track like 5 days straight. So when you have hedge fund placing an order for 5 days uh, straight, you can be sure that's gonna reflect on the market the next week. So I'm gonna pay attention between the buys and the sell next week because it's gonna be reported on Thursday. I'm gonna see where they're actually flowing.
Okay.
Uh, that's mainly what I'm paying attention to. We do have the pound and the New Zealand
Yeah,
dollar trade. So
thought so.
basically, that was supposed to be a day trade. Uh, wasn't on the time to close the trade, so I let it run. At the time I see the trade, I didn't see any potential issue to close, like to worry about it at the open market. I'm just gonna pay attention at the opening of the market because you have the gap and sometimes the spread, but I don't think that's gonna be a huge issue because the stop loss actually is on a good standing.
Yeah, so just another thing regarding the pound on COT data, we are seeing an increase in short selling as well, which supports obviously your idea and my pound USD shorts as well. So we see increase in shorts net change. We've gone from a negative 2.7 to negative 4.1. Short contracts heavily outweigh long contracts. Long contracts decreased by 16K. Short contracts only slightly reduced by almost 3K. So yeah, the COT report's currently really supportive of pound short.
Yeah, I do pay attention basically to the New Zealand dollar because the Scotland currencies, like the most annoying thing with the Scotland currencies, especially like New Zealand dollars and the AUD, is you can have 1 or 2 week straight. Both currencies is literally not performing at all. And the third week, out of nowhere, this currency just go from minus to plus 20% based on the currency strength. So that's why I do pay attention with this. But I mean, if it goes plus 20% above, I mean, it's not a problem for us right now. It's literally support the position. But, I do not worry about it too much. Regarding the indices, we saw that the S&P 500 also reached out almost all-time high. Same for the US 30 and what as expected, market literally reverse. On the Nasdaq, we had a position also, which I was mainly building long position on that one. Do not worry about the Nasdaq because I'm mainly looking to long-term position, which means over the month I will keep put buy orders. But guys, I do not recommend that you do that because it requires a specific uh, management, and I don't want you blow your account because I'm not going to jail for anybody.
Um, okay, so actually just bouncing off something you said earlier. So today, some of the Discord people you may have seen, I put a picture of
Yeah.
some notes in the Discord. So I spoke to Mario, which is one of our economic guys at Elite Trades. He works in the background, but he helps out quite a lot in terms of what's going on more of an institutional side because he's university, all that sort of stuff anyway. So I will send the full pictures in the Discord after this call if you want to actually read them properly. But essentially, I'm looking to start positioning for long-term short positions on the Swiss yen, the CAD yen, and a potential long-term position on dollar Swiss as well, which we're actually already in. So I may just extend that one. When I say long-term, I'm looking for the sort of next 6, 12, 18 months, obviously depending on how economics and monetary policies develop over the months, of course. But essentially, what we've got with the Canadian dollar, we've got a bearish outlook overall. So we've got economic weakness, slowing growth, labor shortage, high household debt. Obviously, Trump 25% tariffs, damaging exports and trade relations. We've got exports to the US make up 75% of the Canadian dollar's trade, or sorry, the Canada's trade. We've got aggressive cuts by the BOC. So we've already had the 25 basis point cut. New tariffs could force more cuts. We've got a widening policy divergence between the Bank of Japan. This is where the CAD JPY short comes in. We've got Canada's taking a hit due to falling oil prices as well. Swiss, we've got the S&B easing cycle. So S&B's already cut 50 basis points and could explore more within 2025. Possible negative rates. Now, this is a underline the word possible. It's been spoken about, but it's not, there's no guarantee. So again, we'll have to take that one as it comes. But that would really hurt long-term appeal. Again, we've got economic weakness, which would also hurt the long-term appeal of that one. US dollar bulls, I won't go into that one because we speak about the US dollar all the time here. The yen. So again, if you guys have been paying attention to me, I've actually been really on the sidelines with the yen. I've actually been a bit of a bear. Well, to be honest, maybe as I was showing at the start of this webinar, the yen's actually been doing quite well recently. So I think I had a little bit of a bias problem. So the Bank of Japan is slowly, I should have put slowly here, slowly shifting towards tightening while others are easing. So in terms of central banks, cautious central bank, but moving to a stable policy or stabilizing policy. US tariffs are leading to a risk off market or slightly risk off or could lead to risk off. Now, the reason that this is more beneficial for the yen rather than the Swiss, again, is because the Swiss is currently looking like it's cutting quite aggressively, whereas the yen or the Bank of Japan is looking more towards holding and hiking. So the appeal is more towards the yen than the Swiss. The carry trade unwind could accelerate. Global rate cuts provide support for the yen and the US dollar. So conclusion and final thoughts, I'll cut to the point. Again, I'll put these into the Discord if you actually want to read them in full detail. So I'm looking to go short CAD yen, short CAD Swiss, Swiss yen, and long dollar Swiss. So if you just take a very quick look at these markets on their long-term timeframes, let me just move the camera here. If we look at this market and we are looking to potentially short over the next couple of months, excuse me, there is a lot of room that we could start slipping to the downside. And I'm not saying we're going to see a full move back down to the previous sort of, support resistance, if you want to call it that. But there is that potential in this trade for something pretty great to happen. Now, when it comes to actually approaching a trade like this, when we're building or looking to have a long-term position and we are heavily relying on data releases and monetary policy, and we need these things to work out and continue and develop in the way we need for this type of trade to work, I personally don't want to and don't like to go in with something like this because it's too linear, it's too straight line, and it doesn't allow any room for error. So what I am considering doing right now is placing very small positions, possibly on a bi-weekly basis, and just monitoring how news comes out. So it wouldn't be a case of, again, I wouldn't put a 1% stop loss and a 5% take profit. It would be more a case of building in a 0.02 lot sizes, 0.03 lot sizes. And then if it goes wrong, if things change and this market starts to turn bullish again, I can get out a very minor loss. But if we are currently still sort of hovering around here in at 2 months' time, that has allowed me to start building a position to head down. I can continue to add into a winning trade. Now, the final thing I'm going to say about this is, again, it's heavily, heavily reliant on what is coming out of these economies. So it's not something I am really looking to do yet. And again, according to Mario, one of our economics guys, the markets don't seem to really be pricing in what we're looking at right now. So it might even be a bit too early for this to actually start playing out right now. So it might be something we come back to in 2 months' time or 3 months' time, and then we can start looking to execute. But it's something, if you can start getting ahead on economics and you can start looking at things like this that the general masses aren't really paying attention to, there's a lot of room there to start making money. So again, this is it, but I'll send the paperwork through for you to all have a look and read and see what you guys think. But this is just my 2 cents on how currently viewing the markets.
Um, you're going to spread bidding.
Yes.
Okay. Because I don't know actually the also the things is very important when you do this kind of trade, guys, is pay attention when you know that you want to get involved in that position and you're willing to hold the trade for like more than 1 month. Pay attention to the swaps because if you don't do spread bidding and you do CFDs, I highly recommend that you go over your broker and check if the swap is positive or not. Because some of you might be able to take the trade for like 2, 3 weeks, but on the fourth or the five weeks after that, you might want to complain about, oh, I'm getting negative swaps or whatsoever. So always pay attention when you take a trade. See if it fits you to hold the trade for a
Yeah.
long run
So
or not.
that is a point I completely forgot to mention actually. So if you're going short on these yen crosses, so CAD yen, Swiss yen, you will be paying
Basically,
swaps.
yeah.
Dollar Swiss actually is positive swaps, so that one isn't an issue really. Um, so yeah, from me, that's it to be honest. Unless you guys have got any questions.
Mm, I don't see any question on the chat. Uh, can you pull up the US dollar and the Singapore dollar for me, please?
Which time frame?
Mm, 1 month. It's on the DAX. Okay. So basically, I was in that trade. At the same time, I opened the US dollar Swiss franc trade, which I do like to trade on both at the same time. But the only problem right now with that position is the Singapore dollars doesn't give the same momentum when you trade like Swiss franc or the yen or the euro dollar. But
Mm.
when the move happened on the market, yes, it's pretty huge. So I was basically looking at the monthly time frame. If I can leverage the trade, why we actually long US uh, Swiss franc. Someone else asking about the DAX.
It must have been to you. I can't see the DAX. Let's see. So yeah, I don't really have an opinion on the DAX, to be honest. Do you?
I will be very cautious with the DAX right now because
Mm.
I do think what we are seeing right now with the US equities might impact the DAX in some ways. We're gonna have the same shift on the short term. So I'll be very cautious because the DAX actually almost and didn't even reach 22K already, but you'll see price pull back. So I would say 21.5 around this level, maybe before expecting to do any buys. But that's pretty sketchy. Just pay attention. I'm gonna check what we have in the data that's come for Germany. So we have the PMI manufacturing tomorrow, which if came out very positive, will affect the DAX positively. So pay attention to how the data comes. But at this time right now, I don't trade the DAX that much. I literally avoid to trade any Europe equities. But pay attention to those level.
Yeah, makes sense. Yeah, the DAX, yeah,
Mhm.
not something I really look at too much, to be honest. Um,
Because what's pretty sketchy with the DAX is when you got PMI data comes out and you are the EFO. The EFO is the most important data that's come after the DAX. And that information can literally switch the market. So like for those don't aware about what is an EFO, the EFO is meaning information and false gun. That give you the broader economic of the situation of Germany. And we all know that Germany is a key point with all Europe countries, especially
yeah,
for France.
okay. Um, Sweet. So yeah, is there any final questions? Because I think, yeah, for me, I've covered everything, to be honest. Um, I don't
I'll put an
see.
update next week when I go through the market, but I don't
Yeah.
have any specific trade. I do pay attention to Nasdaq. It's still on the list. I just need to find a pretty strong area, and also silver.
Oh
Do you
yes, I actually
have
have silver. I forgot completely about silver. Actually, this is the wrong chart. Um, yeah, I'm not
the week?
sure in terms of technicals where I'd want to get in, but I am looking towards buying it.
So I have a position on silver, but that's position I've been there like I think November or December,
Mm.
a long position, which was literally on future contract. So I saw already some move happen last week, which happening finally because holding a trade where you specifically get negative swaps, it's not the best, especially when you hold silver. But I'm literally looking for a pullback before expecting a new entry. I don't think at this time we're gonna see so much impact on the commodities. I'm specifically talk about silver. I don't talk about gold when I'm
Yeah,
saying this because what's gonna happen if we have any information, gold is gonna be the first commodities to take a hit on the market. If you guys notice, silver rarely take hit on the market, only after gold. So I likely to pay attention to silver because I don't know too much people will talk about it and trade silver. Okay. So this is the main commodities I will put on the list. We also have oil price I'm looking for, but right now I'm far away the need. So I'm not actually put that on the top of the topic I want to talk about today.
okay. Yeah, silver looks good.
I had
Yeah,
copper,
okay. Copper? Okay.
um, I had copper and natural gas. Natural gas, I will see it tomorrow at the opening of the market, where we are right now. Because can you just put NG? Yes, that one. Okay. Until we not around $3 or below $3. Uh, I think it's pretty dangerous to get involved right now because that current chart actually is the benchmark I'm using when I'm taking a trade on natural gas. It gives me uh, a view of where I want to go on a trade. Because if that pullback unexpectedly, that's mean what I'm actually trade on the other charts, which is the future contract, but the softest one, that means the price is gonna pull back more aggressively, which likely to hit my stop overnight. But we'll see how it goes.
Okay. Okay. Just so yeah, I think a general rundown would be I would expect the euro, the pound to continue its weakness or their weakness. I'd expect the dollar to continue to the upside. I'm looking really for around 109 to 110 in terms of medium-term targets. The yen, I would expect potential long-term upside, but immediately in short term, I'm not 100% sure, which is again why I'm going to take my time on the trades I mentioned earlier, Swiss yen and CAD yen. Um, so yeah,
Do we have SNB? Um, do we have
Ooh,
SNB data coming soon?
let me
Because that can
just
be a good
check.
reason to really wait for.
Yeah, let's see.
Because I feel like it's been a long time. I didn't heard about SNB making any moves on the market.
Yeah, okay, let's
We have
central
consumer
banks.
data.
Oh, it's down here. Let me. Um, there. Okay. So the next is January, February, March.
Okay, we have gone.
Yeah. Uh,
That's mean you have to. That's mean basically either you're going like starter entry until March, or you literally sit on your hand and waiting for March.
yeah.
Because the S&B, what is the S&B moving the same way at the BOJ? So S&B would not specifically say anything. It was just go on the market and intervene at any time.
Yep.
So that's the pretty sketchy part because if you go on a trade and you went to bed, in the meantime, you're not on the same time zone and you wake up, dude, you just want to cry. I say, okay,
Yeah.
I should have removed the stop loss. I should have do that.
Yeah, it can be nasty. Same with the Bank of Japan intervention back in July. That was brutal.
And
Um,
I'm pretty interested because they didn't we have basically only cut on the market right now.
yeah.
Um the next move, I don't know which one gonna the ECB right now. What she said and what she said at Davos is basically two different things. And I was like, okay, so you're in Davos, you're saying something that sounds pretty good and cautious because maybe she had investors around. And when you go on an ECB meeting, you're saying the opposite. So I'm like, okay, what is the main goal of doing this?
Yeah.
So I think right now they do have a proper plan to move. That's why the ECB didn't make more drama around the cut.
Mm.
Okay, yes.
Right. Okay.
That's gonna be all for me, guys, and I will keep you posted because I'm just gonna go over the market, but not right now. It's pretty early for me to do that,
Yeah.
but I will put everything on the Discord between tonight and tomorrow. Basically, I don't trade that much on Monday. It's gonna basically research.
Okay, sweet. Okay, guys, thank you all for coming. I appreciate it. We will see you very, very soon. This recording of the webinar will be uploaded, obviously, to webinar recordings. I'll put the PDF in the chat as well in Discord. So, guys, have a great rest of your Sundays. We'll obviously be in the elite chat if you need us throughout the week. Have a good one. See you very, very soon.